Hey guys, this is Ernest Martinez with Wealth Legacy Group and Superior Properties Group. So, welcome to this video. Now, this is a series of the top benefits of real estate, and this is the second video out of the six. And this one's about the tax benefits of real estate. And believe it or not, this one's broken up by itself into another six just within the taxes. Um, this is probably one of the biggest reasons why so much money is shifted into real estate is for the tax benefits. In fact, um, it's a way literally through taxes to save tons and tons of money. Okay, so let's go through all of these. Okay, the first one is depreciation deduction. So the IRS basically says that a property, a house, lasts or has um, how can I say this? Um, a lifespan. It has a lifespan of 27 and a half years, which means after you buy a property, you can depreciate it over 27 and a half years. Okay. So it's basically a tax write off all that time, which is fun. It's really funny, in my opinion, because when you buy a property, it might already be 20, 30 years old, but the clock starts over. So it's interesting. But anyway, that's a deduction right there. Okay. The next one is pass through tax deductions. Um, so that's pretty cool. The next one is deduction expenses. So if you're running it like a business for real estate, like let's say for example, you're running it as an Airbnb in real estate. So everything that you pay for that Airbnb is a tax write-off because it's a business, right? And so even toilet paper, the cleaning lady, everything can be written off. Okay. The next one is mortgage interest deduction. That's the main one that people think of when it comes to tax deductions. But you can write off all the mortgage interest. Okay. The next one is 1031 exchanges. So this is great because the more equity you create, if you don't want to pay taxes and you're moving that money into another property, this is what you do. You do what's called a 1031 exchange, and you can move that money tax free into another property. They used to make it to where it had to be the same type of property, but now you can literally upgrade, downgrade. You can go from residential to commercial. You can do commercial, residential to land, whatever you really want to do. Okay, so all through the 1031 exchange. And then the last one is opportunity zones. So there's other tax deductions if you go to certain areas where the government wants to have growth. So right here in the Inland Empire, in the San Bernardino area, there's actually opportunity zones. Why they want that to be, uplifted and money to come into that city. Okay. Now, just to wrap up all the taxes, this is the biggest one. Okay, in my opinion. So the biggest reason why wealthy people, even if they created their wealth through other means, other businesses, other real estate, the reason this is so powerful is this one. It's probably the biggest part of this. Okay, is you can pull money out of your equity tax free as long as you take it out as a loan and not sell it, right? That's why the thing in real estate. That's why wealthy, especially real estate, entrepreneurs, they never sell their property because that's when they have to pay the taxes. All they do is refinance, because if you think about it, when you refinance and if you have a payment and you rent out that property, who's paying for that property? The tenants, right? So you can continue to pull cash out of the property through that equity, and you don't have to pay taxes on it. Right? Why don't you pay tax on it? Because technically you didn't sell it, right? Um, and it's a loan you have to pay back, right? So that's why you're not paying taxes on it, because it's a loan when you're doing your taxes. So let me give you one of the biggest examples, right? Let's just say you have $1 million property. Okay, you purchase $1 million property, you made $1 million. Let's just say you're a millionaire. um and so if you did it in a business, let's say you made $1 million in a year within a business, and you didn't have a tax, CPA or attorneys or anything, and you don't know. So all you would do is just go to somebody to do your taxes, right? And so they would see, oh, you made $1 million. Okay, so based on your bracket, based on you're gonna pay whatever, right? 30% of that, 35% of that, whatever. So you're gonna pay literally 30% of $1 million. That's $300,000, right, of taxes. That's if you didn't know what you were doing. If you started having other write-offs within that business, that's different. But let's just say after all that part, right? But this is what wealthy people, business people do. If they purchased a property with that $1 million, okay, now you have that expense. So you just spent $1 million. So already your taxes are changing, right? Big time. But here's the beautiful thing about real estate. You can turn around and refinance and pull that $1 million out. There's loan limits on all that stuff, but let's just keep it simple at $1 million, right? So you can pull that same $1 million out, right? And now it's not income, it's a loan, right? So do you pay taxes on the loan? No, right? So you pay zero on that. So now when you go to your tax person, your CPA, you didn't make $1 million. In fact, you spent $1 million, and now you have $1 million loan. You see what I mean? But in reality, think about that. The expense somebody else is going to pay. The $1 million is still in your pocket, and you're saving $300,000 of taxes. Is that amazing or what? In my opinion, that's the biggest tax break, the biggest reason. It's the biggest tax shelter for the wealthy out there. So if you want to become wealthy, you have to learn some of these things that wealthy people do. That's why they own real estate and invest in real estate. Okay. So hopefully you like this video. That was, believe it or not, just number 2. So 2 out of 6. I'll see you guys on the next video. Okay. Have a great day. Bye.